What's going on, guys? It's Brendan, your host. Welcome back to another episode of the Master Closer podcast. Today, I've got my man, Conor Donnelly.
What's going on?
Conor is the owner of GFC Investments, God Family Country. He's a father, he's a husband, he's a great dude. And today we're going to chop it up and we're going to talk about real estate. So just for everybody who's out there that knows me, I invest in real estate. I'm a sales coach for Andy, and when you're in sales and there's good, great, unstoppable, and your skill level increases, your commissions increase, and after you're able to cover a cool lifestyle and you're able to do what you want, you have this little chunk of money just sitting there in your bank account, and you're like, what am I going to do with this? Most salesmen, they blow it and they stay broke. And I know that because I did that for the first couple of years I was a salesman. When I met this guy, it opened my brain to a whole new way of life. He told me his story, which we're going to talk about in a minute. And I was like, dude, I got to start investing in real estate. Like, I'd never invested before because I was confused.
Right.
Because there's crypto, there's stocks, there's retirement accounts, there's buying businesses, there's all these different things you could do. But if you're not clear, you're probably never going to take action on it. So when I met this guy and he told me all the people he's helping, I was like, dude, this is freaking genius.
Right.
So he literally walked me down a path. He helped me acquire my primary residence, kind of like passively, I would say. He just kind of coached me through how to buy a house on my own and get a great deal. But you actually sold me a rental.
Right.
So a lot of people have been asking me lately the details about the rental property I own. Well, this guy can tell you because I bought it from him.
Right.
And it's just really cool, man. So I want people to know who you are because you've had a crazy impact on my life, not just in business, but just personally. I mean, you're a great friend of mine. So first things first, tell people a little bit about yourself and how you got started and where you're at now.
Absolutely. So, again, my name is Conor Donnelly. Thank you, Brendan. Appreciate that intro. Guys, it wasn't too long ago that I started this. And I think that's when I do tell my story, I think the reactions that I get from people are a little crazy because we've been able to do what we've been able to do in a very short, period of time. And, I would say Brendan's probably one of my best students because he's one of those guys that, when you tell him to do something, he does it, So, when working with people and helping people out, I want to work with people who are like me. So, again, with the growth that we've had is all a mindset. And, a lot of people say, that should take a lot longer. Mm-hmm. And, again, everything, in my opinion, comes down to that mindset.
Yeah.
So when I first started this, I didn't have the mindset that I had today with the growth that we've been able to accomplish. That kind of came with hanging around guys like him and the Elliott Group in general. So, when I started this, it was, I hope to do a couple houses a year. I hope to flip a couple houses a year. I hope to burr a couple houses or wholesale a couple houses. Mm-hmm. And that's all fine and dandy when you're doing it and you're working a W-2 and doing it. But again, there's so much more to be had, and that one or two thing, that's okay. And we've talked about that before.
Yeah.
And we've talked about how when people do get into this stuff, they just need to get past that first transaction because, I mean, you probably had butterflies too, and maybe we're a little nervous too. But now you carry yourself and you talk real estate like you've been doing it for years.
Yeah.
And that's what I love. The amount that you've learned in the little time that we've talked. And again, we just talk literally over the phone most of the time.
Yeah.
And we're probably just talking. It's
literally
not like I'm trying to teach you, but I'm going through scenarios that are happening to me on a day-to-day with Brendan. And then he will take that, compartmentalize that, and then ask questions as we go along.
And I gotta add to that just says the power of proximity. Mm-hmm. Because when I get in a conversation now with a realtor or a real estate investor, mm-hmm. they're like, who the fuck are you learning from, bro?
How do you know
And
this
I'm
stuff?
like, well, the first time someone asked me that, they were at an event and we were talking and they're like, how do you know so much about this? Mm-hmm. And I was like, I don't know.
Yeah.
I was like, I know this guy named Conor. He's one of my clients.
Yeah.
And they were like,
And we're
whatever
just
that guy's
talking. And we're
telling
just
you,
talking.
Yeah, it's just like, but it's just like proximity. Like, you know, you're opening a coaching program, and I would urge anybody who wants to be a real estate investor to get close to you, just like they would want to get close to us if they want to be great at sales and have confidence and all that stuff.
Right.
Because that's what we exude and that's what we teach. And that's like every time I'm around you, you're talking about real estate. I never even considered it as an investment vehicle, really. It was something I was like, hey, at one point in my life, like, I think the problem with people is they think, dude, at some point I'm just going to wake up and I'm just going to own all this property.
Right.
Or some golden egg is going to fall out of the sky with
Right.
500 grand in it. I'm going to go put it into a multifamily. It ain't going to work that way.
Yeah.
You're going to have to strategically get in the game. And what I've learned from you is that you don't have to wait until you have $1 million cash to get in the game.
Right.
You can start with zero, which you can, but it's going to be more difficult. It's going to require some
And I'll
front-end
elaborate. I'll let you keep talking. But
Yeah.
when Brendan says, you know, we're starting with zero, can you? Absolutely. But you can also start with zero of your own money, and you can use other people's money to acquire deals. And then when you have your exit strategy for those deals, that's when it becomes yours. And again, if you want to get more into that, you know, I do have a coaching program that does elaborate on how you make your money back to then pay that investor back. And again, it's nothing out of your pocket. And that's how we started what we're doing with our real estate business. Is we don't use any of our own capital. It's 100% investors' capital, and making our investors money, which makes them happy, and they want us to keep doing what we're doing. So when Brendan says you don't need money, it's true. You don't need any of your own money. But guys, to buy real estate in general, you're going to need a little bit of money.
You need somebody's money.
You need somebody's money.
You don't got to have the money.
Right.
But you don't need somebody's.
You're going to need somebody's.
You need to have a rich uncle or a rich daddy.
or rich friend. One of the other.
Have a mouthpiece on you.
Exactly.
You know what I'm saying?
Exactly.
But also not just have a mouthpiece, but understand the game.
Yes.
Because, for example, let's talk about this for a second. So my scenario, right? Because I feel like a lot of people who listen to me are in the scenario that I'm in. Because about 4 years ago is when I started to make money in sales. That was the first year I made over 100 grand. I made about $150.
And you were in cars, correct?
Cars.
Okay.
Blew it all. Had zero. But during that time, I was still paying rent. I was still paying all my bills. I could have had a house. You know, you asked me yesterday, you were like, if you could go back knowing what you know now. I never considered buying a house because I was just like, oh, there's going to be all these expenses and stuff like that. When I see what house prices were in 2020 versus 2024,
cringeworthy.
I'm like, dog, I would have been a millionaire by now.
If I'd have just bought one.
5 times over if I'd have just started. But the point is, you learn your lesson. I learned early because I got to know people like you. After year one, I'm like, let me play a little bit smarter. Next year I made $250 and I saved some of that money. And then I started working for Andy. As the story goes, I kept saving money. I kept growing my income. I kept making more money. And I met you and I had some money saved. And that's when you started to introduce me to real estate. Right. At that time, I just thought, I'm just going to have to save my way because I'm so confused about what to do with it that my number one thing is I just don't want to lose it. But what happened when we met was you brought it up to me that, hey, maybe you should just buy a rental property. You know, your company, you know where the market's at. You guys study the market and you know the popular markets. Right. I think, like Andy says, early adopters are the people who make all the dough.
That's
and it couldn't
true.
be more true in real estate.
It's true.
In real estate, it's true. The people who know where the next boom's going to be are the ones who you should listen to.
Exactly.
And the cool part about real estate is even if it doesn't boom for when we expect it to, like the market that we're in, every one of you guys that reaches out to me and you're like, hey, should I buy like I'm looking at investing in real estate like you, I'm like, call this guy, give him your down payment, and jump on the ride. We're betting on this horse. Yeah. And if that horse wins the race,
which it will,
I'll be a real estate millionaire in the next 6 months.
Which you're going to be.
Facts. But
you know, in my opinion, Brendan's real estate journey, I mean, it just started, you know, when he started looking, 4 or 6 months ago. Yeah. But it was a roller coaster for Brendan. And I could see it from an outsider's perspective because in his head, he wanted, you know, he'd ask me, should I buy a personal residence? Absolutely. Yeah. Absolutely buy a personal residence. And then he'd say, well, these people are telling me this, or these people are telling me that.
Yep.
And I would just stick to what I said. And it wasn't trying to lead him down a path that I wanted him to go. It was basically leading him down a path that I experienced in the past, and I just shared my experiences with him, and to where he could be able to make an educated, guess on what he should do. Yep. Because he flip-flopped back and forth with me a bunch of times on should I buy a personal or should I buy a rental.
Yeah.
And every single time, whatever he was thinking about, I say, do that.
Facts.
It wasn't no, you should really buy this from me, or you shouldn't. It was never that. It was, well, what are you feeling today? And he would tell me, and I'd say, well, then do it.
And that was the coolest part, because FYI, if any of you guys reach out to me, I'm going to push your ass to buy one because it's good and you need to do it.
Yeah.
But what's cool is you kind of know me pretty well, and you know that, I'm an action taker.
Right.
So anytime I reached out to you, I was like, hey, I'm doing this. I just don't know where I'm going to buy at, what I'm going to buy, whether it's going to be an investment property or primary. I end up just doing both.
Right.
As it worked out. But
right.
Yeah, man, I mean.
Or where should I buy?
Yeah.
I was like, you can buy where you are. That's fine.
Yeah.
He's like, well, what about where you are? Well,
yeah.
That's where you should buy. But you can buy wherever you want.
Yep. And that's what's cool is the way our friendship and our business relationship worked was we just started to get to know each other. We were talking daily because we're working on a big project together.
Yep.
And there was a point where you had given me so much information that I made my own decision. And I actually called him after I started working on this primary.
Right.
And I was like, hey, I think I'm going to grab a rental too.
Yeah.
Because the way it works out. I mean, the deal I've got, for example, right? So going back to my story, 24 years old, money in the bank, crushing it in sales, trying to continue to just get better at that every day, but want to build wealth outside of just what I got going on here. Wanting to create passive income and have an investment portfolio, something that's going to grow. So I decided to buy a primary residence first. And you told me you're like, hey, dude, that's a good idea. It's based on your situation. You're like, you're in a good spot. You know where you're going to be there for the foreseeing future. You're like, buy a primary. So we got that done. And then what's the next step? We'll get your first investment property.
Right.
So you found me a house in a great area that was priced at, you got it to me for $140K, which had I bought it from a realtor or off Zillow, probably would have paid a lot more. It's valued at close to $200,000. There's a tenant in the house already, and it's turnkey, so it needs no work.
Nope.
It's ready to go. The tenant's in there, I think, a couple more months.
Yeah.
They're paying the mortgage plus an extra couple $100.
Yep.
And the whole play is what we call a little cash out refi. Can I get it? Come on.
Explain it to them. Come on.
So what our game plan is, I closed on it, a couple weeks ago.
Yep.
And now I own the house. So every month, the tenant pays the rent. I make a couple $100 cash flow on the property. But the big play is that this area is about to explode.
Correct.
Like Tesla exploded a couple years ago.
Correct.
Kind of like on that level, you know what I mean? He studied it, and he's got data to prove it, plus all the real estate deals he's done. He's doing a couple dozen projects there right now and making good little lump sums on each one of them. And so the proof's in the pudding. But in 6 to 12 months, this market's going to be insane.
Yeah.
Obviously, you guys know rates are super high right now. They're like 7-8%. So we expect rates to drop in the next 6 to 12 months. We expect this market to go up as well. So we're expecting massive increases in property values. But also what's really cool is we already have equity.
Correct.
With me putting down 20%, so I put down about 30 grand. I owe 110. The house is worth 200 grand now. So I'm already in enough equity to do a cash out refi when that time comes in 6 months.
Exactly.
But if things work out
now if you wanted to.
Right, but if things work out great and the rates go from 7-8% to 4-5% or even 3-4%, we're going to be sitting on about $300K on the property value, only owing 100. We're going to take that 200. We're going to put it in more houses so we pay zero tax.
Correct.
We're going to lower the mortgage on the current house. We're going to keep it.
Correct.
The mortgage is going to go from about 900 down to about 500-600. And we're going to take that 200 and go buy about 4 more.
Exactly.
And then we're going to keep rinsing and repeating until we're balling like Donald Trump.
After a year of doing this, every time you refi, it should be over $1 million pulling out of the houses that you have. So that's what's possible with just a little down payment. Now, again, you have to know the market. You have to know the right markets, where they're located, what's coming in around them, what are the jobs like around them, are there colleges, not colleges. Again, there's a bunch of different factors to take into consideration when you're doing this. Obviously, we found where we've found, and that's been our bread and butter, and it's been really good for us.
Yep.
And that's why we're sharing it with people that are close to us or people that really want to get into this industry, because we want people in this area to be good to the tenants.
Yeah.
Because the tenants are good people in these cities in the United States.
Totally.
So with what you're doing, he put, again, 36 with closings, I think it is.
Yep. Easy.
36 with closings. Every time from here on out, after a full year with the properties he'll acquire, again, doubling his amount every single year. Mm-hmm. Every time he refis should be no less than $1 million in refiing.
Yep.
Imagine how many houses you can go put on down payments with $1 million when he did one with 30.
Exactly. Yep. And, a lot of people who listen to this are salespeople. So from a salesperson's perspective, you got to think, if you're watching this and you're a salesperson and you think that $36,000 is a lot of money, you need to grab some sales training.
Correct.
Because should be a month for you.
Right.
And what's really cool is when I made that wire transfer for $36,000, it was the best feeling of all time, because I'm like, hey, no longer is this just going to sit here. I mean, once you have 6 months, a year's worth of bills saved up in your bank account, there's no reason to save more money. It's retarded.
Right.
Now, when I got rid of that 36, I'm like, dude, this is awesome, because I was all that was doing for me was it made me feel like safe, and it made me feel like, hey, if I need this immediately, then it's right there. But now that it's away, I'm busting ass. I'm still saving money. I'm like, dude, this is put away in something that is accessible if I ever need it.
Tangible asset.
But if I can just delay this and not touch it for 5 to 10 years, it could turn into several $1 million.
Exactly.
You can't say that about an IRA. You can't say that about a cryptocurrency. You can't say that about any other asset class in the entire world.
Exactly.
So,
and the tax play is another huge giant benefit to it. So, I mean, you're going to pay zero in taxes.
Yeah.
Right? And let's just say, for numbers purposes, let's say Brendan made $1 million in sales actively on a year basis. He's going to get to a point in the next 2 to 3 years that every single year when he does these refis, he's making way more money by not doing anything than he is by actually doing something.
Facts.
Okay. And then again, when he's saying, I put the down payment down and I felt great, because he didn't spend the down payment, he took it from one bank and put it in another, just the Bank of Real Estate. Now it's sitting there and growing and allowing him to be able to buy this asset that will now grow, and he just is going to sit there and watch it.
Yep. Now, let's talk about this. So, if there's a salesperson out there and they're in a similar scenario to me, like they're anywhere from 18 years old, 18, if you had the wisdom to do something like this, by the time you're my age, you'd be a multimillionaire for sure.
My goodness, yeah.
But 18 to any age, really,
right.
And anybody that's in sales that doesn't own any assets besides this liquid cash, first move is probably to buy primary. But if they're not in a good area, it's just not right timing for them. And investment property is probably a good purchase, right?
Absolutely.
So just start with like something similar to what I got. Yeah. And you got hundreds of them.
We got them at our disposal.
We got a Rolodex.
We got them ready to go.
A catalog you can pick from that you're like, you literally just look at it like a freaking playbook, and you're like, Connor, I want that one. And he's like, all right, we'll close on it in a week. Let's go. And then you're making cash flow, and you're about to freaking do a little cash out refi. You're paying no taxes. You're good to go.
Right.
But if somebody's out there and they are in a crappy sales job, or they're in a 9-to-5, and they want to get into real estate, wholesaling's the way, right?
Wholesaling is a good way. It's not how we started, but it is something that we do. Wholesaling is a great way, but another great way, in my opinion, is to get super deadly at sales in whatever you're doing. Because when you are wholesaling houses and you're acquiring properties, what do you have to convince somebody to do? Sell their house to you. Sell something that means, that's somebody's biggest purchase in their entire life. Well, guess what you have to be good at? Sales.
Influencing, persuading.
Exactly. Word tracking, framing. Guess who does that really well?
Come
So,
on.
guys, when people do reach out to me about a coaching program, you know, and they are young and they don't have the money to necessarily put a down payment, I mean, there's nothing truer than I tell them they should talk to Brendan, because you need to up your sales game. And when everything ups like that, I mean, guys, if you were making 20, 30 grand a month, I mean, now we're not worrying anymore. And now we have to have tangible assets to put that into, because we're not paying the man what we're going to pay the man.
Yep.
Okay. So in my opinion, an 18 to 20 something year old, like we've all been, I mean, guys, iron sharpens iron. So call this guy, he's going to sharpen you, and then we can go on from there.
Yep. And what's cool is, dude, you've helped me mature a lot, because, you know, I was making 20, 30 grand in the car business a couple years ago.
Right.
And I thought my end goal was like, hey, I'm just going to save until I got my number where I can retire. And then obviously I'll probably keep working, but I'll be able to retire if I want to. Well, you know, even if you're making 20, 30 grand, you're like, well, shit, that's going to take me a long time, because I'm going to need some couple M's, bro,
Right.
minimum.
Right.
Probably tens of them.
Right.
But once you explained the real estate play to me, it became so much more clear. It's not you make 20, 30 grand, you try to save 10 grand a month, you keep stacking 10 a month, then 20, 30, 40, 50 a month. You just maximize your income until you've got 10 million in the bank. You could do that in a quarter of the time using real estate as your bank.
Correct.
So the play that I'm running now is keep maximizing your income, your sales income. Make it as high as humanly possible. Make 500 grand or $1 million a month if you can, if you're a business owner or a salesperson. But take all excess money besides 6 to 9, maybe 12 months of bills if you're a super, it's going to rain tomorrow kind of guy.
Super prepper.
Yeah. And then take everything else, put it into rental properties.
Yeah.
And there's people out there who will say, hey, don't do that. Well, when you know a guy like this that owns the property management company and has boots on the ground, which if you're unfamiliar with what that means, it means he has a team in the area, in the money area, that takes care of this kind of stuff for you at a discounted price. So you're not paying out the butt, calling contractors. I don't do anything with my property.
Right.
If anything happens, they're like, hey, unfortunately this happened. You're gonna have to pay $2,000. I'm like, whatever. It's part of playing the game.
Exactly.
I have an upside of pulling out 200 grand. If I got to spend $5,000 to fix something, whatever, dude.
We're not going to cry over it.
Don't be a little bitch. Come on. But yeah, man, I mean, I just see it, you know, once you explain that to me, I everybody I talk to, I tell them about it, because I'm like, dude, this is the play, and you're either going to do one of two things. You're either going to be a part of it and make a bunch of money, or you're going to look back in 5 years and you're going to be like, damn, I should have been in now. So it's just like, you know, you just got to start. But break down, what is wholesaling for people who don't know?
All right, so what wholesaling really is, all you're doing is selling a piece of paper, okay? Let's say Brendan is a homeowner, okay? And he's got a distressed property, or it just doesn't look as pretty as all the other ones in the neighborhood. And I'm driving by, or I'm whatever, I see it somehow. I'm going to go approach Brendan, and I'm going to make an offer that I know I can get rid of it to an investor who is going to either flip it or buy and hold it. So for round numbers purposes, I meet Brendan. I say, hey, you know, I really like your house, love the area. We're looking to buy more in this area, yada, yada. We agree to a price. Let's say we agree to a $100,000 price. I am then going to get that house under contract. Brendan signs it. I'm going to now take that piece of paper. I'm going to go find Mr. Investor who's going to flip this or hold it. And I'm going to approach him and say, hey, Mr. Investor, I have this house under contract. You can purchase it for $120,000. How does that sound? He says, okay. We go through the entire transaction. At the end of escrow, when the investor pays for everything, escrow then wires you your $20,000 fee, and that's the end of that transaction.
Boom. Now I'll tell you why I asked you that, because I'm getting more and more interested in it, because I see it as a really good way for a salesperson out there.
Yes.
Who, like, let's say you're in an industry that doesn't pay very well. Like, And when I say doesn't pay very well, I mean like you can't earn more than like 200 grand, maybe 300 if you're the best in the entire world.
Yeah.
Somebody like that who wants to earn more money could kind of do this on the side, right?
Correct.
With the right system in place. And you don't have to put any money into anything.
Right.
So like if somebody's a wholesaler, what are the buzzwords? Like how do they determine the value of the property? Like to like put in an offer on it? Like what are the buzzwords, I guess?
So the biggest thing is just finding out what that property is worth all fixed up. You almost have to think like a flipper or a buy and hold person.
What would be the name of that? Like what's the name of that term? The fixed up value. The value
So that's the ARV, that's the after repair value.
Okay.
And that is going to be what that property is going to sell for once it's all fixed up.
Okay.
So if you have, if you're deadly, the first thing you would have to learn in the wholesale space or any real estate in general is how to comp and how to find that ARV, that after repair value. Because once you find that, now we can run all our numbers to figure out what our offer needs to be to Mr. Homeowner, that we can get it under contract, and it works for everybody. We're not screwing anybody over with the contract that we're
So we get the ARV. So you look at my house, it's worth 100.
Yep.
Well, I got it listed for 100. You take a look at it and you're like, the ARV is 150.
Mm-hmm.
How do you determine rehab costs without seeing it? Do you need to send somebody out there, or do you kind of just like eyeball it if it's like over? Because there's a lot of people who wholesale virtually, right?
Yeah. So when wholesaling virtually, obviously what comes into the biggest factor is that homeowner telling you the truth about what their property's condition really is in.
Got it.
Okay. So if they're telling you that, everything works really well, it's just nothing's been updated in 20 years. Okay, so kitchen's the same, everything's the same, flooring's the same.
Yeah.
That's cosmetic rehab. That is the lowest price per square foot that a contractor will come in and price you out at.
Got it.
Now, it's different for every single market. Okay, so again, each market is knowing what your contractors, what their price range is going to be depending on the extent of the rehab.
Yeah.
Okay, so if we're running our numbers and homeowner says, yeah, it's just everything really needs updating or it just needs a quick update or whatever, we're going to come in and we're going to replace everything that's outdated. And in our market, we're looking around $30 to $40 a square foot.
Got it.
Okay, but it's always going to be, when contractors come in and price you out, depending on where you are, Nick's California on what I'm about to say, because the prices there are just crazy. But you're never going to go over, $70, $80 a square foot where we are in terms of the rehab for flipping houses and figuring out that cost. Now, if you were telling me that, hey, Connor, the kitchen just needs to be, the cabinets need to be repainted or this, that, and the other. Okay, so in my head, I'm thinking $30 to $40 a square foot. Let's go 40. And let's say your house is 1,000 square feet. So what that rehab, we're going to take what we think the rehab cost per square foot is going to be, and we're going to times that by the square foot of the home. Okay, so when we do that, for this example, we'd get a $40,000 rehab. So what we would do is we would take our ARV of 150, times that by 0.70, and then we'd minus our construction cost. That's the number we would get if we were going to if we were going to flip the house. That's what a flipper would buy it at. So let's say that's $50,000.
So you're saying 100,000 times 0.7, 70,000.
So 150, because that's our ARV.
ARV minus or times 0.7.
0.70, so 70% of the market value.
So we're looking at, what is that?
Off the top of my head,
I'm not
I
good
don't know.
at math. I'm not a math guy.
But we'll just keep going. We'll keep going with that, because then we're going to take that number, whatever that is, and we're going to subtract it by 40,000, the construction cost.
Yeah.
Now, whatever number that comes out to, that's going to be what a flipper would buy that house at. So let's just say that's $70,000. Okay.
Yep.
We would need to be at, now depending on what your wholesale fee is, so let's just say you need to make 10 grand per. Okay, so 70. Now we minus $10,000. We need to get that contract for $60,000, and then we're going to sell it to a flipper for $70,000, and we're going to make the $10,000 fee.
Got it.
Now, these aren't hard numbers on any hard houses. We're just going over basic numbers with you guys just to get you guys a feel on how it works.
Yep.
But those are the formulas we use. Again, it's ARV after repair value. So whatever that house would appraise or value at its peak, we're going to times that by 0.70, so 70% market value,
Yep.
and we're going to minus it by our construction costs. Okay? And then we're going to minus it by our wholesale fee, and that's how we could wholesale a house and get our numbers that way. So, and that holds true if you're flipping a house, and that holds true if you're burring a house. Okay, if we just stick to those numbers and we kind of keep our 30% net, then we're always going to win, and we're never going to have to worry about, the oh shit moments.
Right.
And that's why we run the numbers as hard as we run them, and we stick to them the way we stick to them, and we do not go off of hypotheticals or this is what we think's going to happen. We do it off of this is what we know is going to happen, and here's our data to back it.
Yep. And we basically, the reason that I asked you about wholesaling is because that's the foundation of pretty much everything you do, correct?
Correct.
It's like if you get that property under contract, from there you can do whatever you want. If you're like, hey, this property's pretty clean, it's got good bones, I'm attached to it a little bit, you buy it, you renovate it.
Yep.
You put in a little, like you did the math, but put in 10, 20, 30, 40,000. Now the property value goes up.
Right.
And you put a renter in there.
Correct.
You refi, you repeat.
That's it.
Proprietary blend, baby.
Numero uno student right here. And all he did was listen to me over the phone.
Yeah. Facts. And then, but then also you could flip it.
Yeah.
And if you flip it, you basically did the same thing.
It's all about the exit strategy. That's what we're trying to figure out every time we acquire. But if we acquire at a wholesale price, now we have all exit strategies at our doorstep to execute.
Yep. So if you get it at wholesale, let's say you didn't get it at wholesale price. Let's say you stretched a little bit on one, like in our scenario.
Okay.
Let's say instead of, like, you got your flipper number, right? Yeah. The number you'd flip it for.
Yeah.
But the homeowner won't budge. What's cool about you is you also know how to raise capital, right? So you have your own capital, so you always got that in your back pocket that you're like, hey, if this is a really nice property, and I put, say, you could always just do the flipper number, right? Instead of having to go for that wholesale assignment fee of 10 grand.
The first option, again, when you have all three and you're able to do all three, obviously the first one we always look at is wholesale because it's the quick return.
Yeah.
So
with no money invested, really.
Right. So it's, do we wholesale this and make X, or do we flip it and make, more? Because you're always going to make, most of the time, you're going to make more flipping it than wholesaling it.
So how do you build an 8-figure company where you make a handful of millions of dollars in 1 year, and you got all three of these avenues to make money? Y'all are going to find out on the next episode. Come on.
Here we go. Stay tuned.
Yeah, but we're having fun.
Yeah.
This won't be the last time you see this guy. He's going to be coming out here quite often.
Absolutely.
But thanks for coming on the show.
Absolutely, brother.
We got something big coming up right after this, so we got to bounce. But I appreciate you guys watching. Take this message to the heart. Invest in some real estate. I'll leave them with one thing. So someone asked me the other day, they're like, what should you invest in? And I honestly said, dude, it's not what, it's who you should invest with.
Yeah.
Because he was like, well, I met all these people. I know all these people who, some people do crypto, some people do real estate, all this stuff. I said, bro, it's about who you know. Like, the reason that I bought the house from you is because we have a relationship.
Right.
And anyone who has a relationship with me should create a relationship with you because I trust you.
Yeah.
So the most important thing when you're looking at an investment is who it's with.
Right.
And I think that, whenever it's the who, the person who you're investing with is trustworthy, and also it's a great vehicle, it's a no-brainer.
Absolutely.
So,
Appreciate
my
that,
man.
brother. Appreciate it.
Yes, sir. Let's kick some ass.
Let's go, boys.
Come on.